What's up, ladies and gentlemen? We're going to get started starting now. Wow. It's almost like the markets are rigged. Anybody notice that? I noticed it. Almost like they're playing games with us. What kind of games are they playing? Playing all sorts of games. So what we're talking about here, for anybody who does not know, is a program called TachEon TimeWarp by this awesome little company called Back to the Future Trading. That was crazy. I was like out of my body for a second. I was saying all that and I was thinking about like 2 or 3 other things. Okay, I definitely need to finish my coffee. The power of predictive trading technology. Maybe if I use a really cool like announcer voice, I'll be able to get into it more. You think? Maybe. Jake, have you lost your mind today? Maybe. Almost done the coffee. Oh, more people are flowing in, so that's cool. Usually we don't get started till like 4:10, but today there was a bunch of people already. Oh, 2 more sips. You can do it, Jake. Man, I've been really introverted lately. This is as close to getting out in the world that I've done here in a little while. And it's still just me by myself in my office. Picture Jake by himself in the office. He's a little wacky. Maybe Michael's listening. Maybe he isn't. Doesn't matter. Are people thinking that I've completely lost it? Maybe. How long is he going to keep doing this? Maybe the rest of the webinar. Okay. It doesn't have to be so serious all the time. It just doesn't. In fact, what I've realized is the less serious I can be about this whole freaking trading thing, the better. There's this balance that when I strike it, I can feel. I know that I feel that it's right, where it's somewhere between being loose and being strict, like being strict in the looseness. You know, like with these things here, the 5 fundamental truths and the 7 principles of consistency. I'm not a tattoo guy. Don't have any tattoos. Probably will never get any tattoos. But if I was going to get a tattoo, I'd get 2 of them. This and that. Probably right on my arm. What do they call that? A sleeve? Right on my sleeve, yo. I objectively identify my edge. I predefine the risk of every trade. I completely accept the risk, or I am willing to let go of the trade. I act on my edges without reservation or hesitation. I pay myself as the market makes money available to me. I continually monitor my susceptibility for making errors. I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. Fundamental truths. Anything can happen. You don't need to know what is going to happen next to make money. There is a random distribution between wins and losses for any given set of variables that define an edge. An edge is nothing more than an indication of a higher probability of one thing happening over another. Every moment in the market is unique. It's when I start to think that I know better, discretionarily, than my rule set states, is when everything goes to hell. Thinking that, oh, well, this moment, this moment in it, I know what's going to happen next. No, you don't. You don't. So what we're talking about here is this super amazing program that gives us these little dots, these time dots, these timestamps out into the future when we're allowed to trade. There's these windows of time where this 12,000 lines of code, fantastic slice of software goes back into historical data, and it finds these times where the market put in swings, these windows of swinging high and these windows of swinging low. And when they overlap enough, over the course of 5, 10, 15, however many days you want the indicator to look back, when they overlap enough, the indicator prints a time out into the future, basically stating that there's a high probability, a higher rather than lower probability of one thing happening over another, perhaps buying, perhaps selling. But it matters how the market acts on the way to that time. So what the software basically does is it goes back and looks at all of this over days and weeks. I can probably do, well, yeah, it can. It can do months actually on higher time frames. It goes back and looks at this shenanigan and it finds spots. And when those spots of highs and lows in these swing windows, if you will, overlap, it prints dots out into the future that look like this, these little dots. 435, typically a buying window. 605, price, there's a higher probability of the price going down, depending on what way the price moves into this blue dot, of course, as we know, for anybody who's an advanced user of the software. And then it just oscillates. White dot, blue dot, white dot, blue dot, white dot, blue dot. White is up, think clouds. Blue is down, think ocean. It just keeps going and going and going and going. We could get forecasts for next week. In fact, what Back to the Future trading does is they send out, there's me and my dog, they send out, I thought I turned that alarm off. No. I will, oh, where are you? Where are you? It's, oh, there it is. Die alarm, yes. So what Back to the Future trading does is every Tuesday, they send out an email with the times, the dots, the projections for Wednesday and Thursday. And they send this email to, I don't know, I think 5,000 people, somewhere around 5,000 people are on the mailing list. And the times are also posted on the website. So if we go to the website, let's go there. Let's just go there now, shall we? Yes, shall we do it? Back to the Future trading. Come to me, Google. If we go to About and Live Weekly Webinars, we shall see TimeWarp projections. And we will see here that on Wednesday, February 8th, the market forecasts for the S&P 500, 5-minute, 3-minute, crude if you want to do that, 1 and 3, and gold, DAX, Dow, NASDAQ, couple Euro USD thingamajiggies, bunch of stuff. And also for Thursday, ES 3, 5, crude, forex, NASDAQ, all these times are available on the website. Let's zoom in a little bit. Sorry if that's making anybody dizzy. I don't know why I did that. Well, it's a really big picture of Michael. There we go. So there are the times for the NASDAQ 1-minute chart. Why does it do that? I'm not sure if everybody can see that. I'm having a hard time seeing it myself. But anyway, those blue lines are the blue dots, the white lines are the white dots. But of course, as we know, the market just doesn't go up and down and up and down and up and down and up and down and up and down. So it matters on how the price moves through these windows of time on the way to the next time. And all of that is explained in, I mean, the instructions are quite thorough when you buy the software. And then you can also book mentor sessions with me. You can do it with Ron and Michael and multiple different options and multiple different ways to trade the software. So there will inevitably be a way to trade these dots that works for you and your set of experiences or how you would like to trade them. So let's see, where am I? So the theory here is that the markets are not chaotic, that there is some kind of order to the markets, which to me makes sense since obviously there is order to the universe, otherwise we wouldn't exist. It's just finding that balance, I suppose. Just got some questions rolling in here. How to understand TachEon? Yeah, you can Bharat, you can email Rachel, RACHEL at backtothefuturetrading.com. And she should be able to help you with that. So there's only a few people that hang out here at the company, and as Michael and Ron started the company, I don't know, 12 years ago, I believe, something like that. And there's Dave. Dave is the sales guy. He is in charge of all salesy things, and he's allowed to cut deals and packages and all sorts of stuff. He's going to post his contact information in the chat, and his email is david@backtothefuturetrading.com. His phone number, I'm going to say his phone number a few times throughout the course of the webinar, 727-742-2626. Give him a shout and he can get you some dollars off or throw in stuff to sweeten the pot, because this software is robust. So guess what? It costs money. Welcome to the world. So there's the signal and then there's the setup. The signal is just the dot. And then there's the setup. How do we trade the dot? How do we trade that? How do we trade in that time window? I'm going to go ahead and read this. I need some Trading in the Zone today. From Trading in the Zone, Mark Douglas. There is a random distribution between wins and losses for any given set of variables that defines an edge. This truth makes trading a probability or a numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities. So that's all we want to do, right? Just get our expectations in harmony with possibilities, not expecting to really win or lose. That's the key, man. It really is the key. That's the key of all trading psychology, I feel like. When I don't have this, when it's not sticking in my mind in the forefront, that's when things can go awry for sure. We went over that. There's some equity curves. One's the Ron's Pro Trading Room. One's an Apex account that I qualified for using TimeWarp. Well, let's look at some charts. So, well, you know what? Check this out. Oh man, there's probably so many more penalties. So what the software is doing, it's going back and it's looking for moves that, say, Bank of America helped to create, or JP Morgan Chase. And I don't know, when they're creating those moves, sometimes they get smacked with a little penalty. And as you can see, they have racked up quite the bill. These fine, upstanding institutions. And what TachEon TimeWarp attempts to do is to predict these industry institutional moves. And we just want to get on board with what direction Bank of America is trading in or Citigroup is trading in. They can take the penalty, and as we can see, they'll keep taking penalties. The government will keep letting them give them money, and this cycle continues. Let's look at some charts. Okay, so what should we do today? Nobody answered me. Nobody answered me. There's no audience precipitation. We got a bunch of different strategies that we can go over. Is anybody interested in anything in particular who've seen my webinars? I have there's like 3 strategies that I have taught on this webinar. I don't know, maybe the easiest thing to do is just to do the old school. Let's just do the old school real quick. Let's get rid of this background image. There we go. Let's get rid of patterns. Let's do some comparison. Single dots only. Yeah, let's do it. Let's do some old school 5-minute. Anybody doesn't know old school? Thank you, Weston, for participating. For participating. I need to have some coconut water here. 1 second. Blue dot, white dot, HMA, blue, white. Target 1, target 2, and a runner. That's what we're going to try. We'll try that. So let's go over here. Well, actually, you know what? I'm going to cherry pick some pre-market stuff just so I can show you folks the strategy. Here's a good cherry pick right here. And then we're not going to cherry pick. I actually didn't follow Warp today, so I don't really know what's going to happen. It could be a total disaster. Not every day is a winning day. Wow, imagine that. It's trading. So at 6:20 a.m., can everybody see that? For some reason, my stinking times got smaller. I'm going to make them a little bit bigger here. If anybody notices my times being off, please let me know. I'll go to patterns, and we'll just go to timestamp. And we're going to make the font size, let's try 25. That looks good. Let's do 30. Bam. Okay, so what the strategy is, actually, I'm going to add a little bit more margin on the side here. Let's make that 300. Excellent. Okay, so I'm cherry picking this 6:20 a.m. signal. Blue dot, that means selling window, selling window. We're going to make this red. Red for selling. So we need a blue dot. So our selling window is going to go from 6:20 to 6:55. At 6:55, the buying window starts. So we have to exit all positions at 6:55. So there's 3 things that we need to enter a short. We need a selling dot, selling window, of course. Selling dot, selling window. The selling dot is blue. We also need a couple other blue things. We need a blue HMA. This is a 21 period HMA. And you can find that setting, or I'll just go through it. And I already know that people are probably asking questions or about to. What are your settings, Jake? They're the same settings that we always use on the webinars. We can't change them. Swing is 8. Calendar days, 7/14. And the HMA down here, HMA is 21. It's a whole moving average. It's an Australian. It's an Australian indicator, mate. All right. And we also need, so a blue dot, blue HMA, and we need a blue candle closing below the blue open price line. So blue, blue, blue. Now the open price line is this line right here. It's the open of the next candle. It's actually the close of the signal. This is the signal candle here. So we need a candle closing below this blue line. That's our final lock. So blue dot, number 1, blue HMA, number 2, candle closing below the, candle closing below the open price line. And what we're going to do is we're going to enter a market short at the close of the candle below. And then we're going to pad our stop by 15 ticks. So I have this little Fibonacci tool that I made. Hopefully I cherry picked a good one. I don't know if that's 15 ticks or not. No, it's 2 ticks. So we always pad our stop by 15 ticks. And here's a little way that we can do that, so we don't have to measure it every time. So I'm just going to measure 15 ticks out. Stop it. 15. Okay, and I'm going to draw this little box like this, and I'll know that that's my stop pad. So we don't even need this anymore. So our entry is going to be here. And we're going to enter 3 positions. And then we're going to have target 1. And we're going to have a target 2. And we're going to have 3 stops up here. Offset by 15 ticks. Okay. Okay. Target 1 is going to be this green line. Target 2 is going to be the green line down. Enter 3 positions here, and our stops are offset by 3. Our 3 stops are offset by 15 ticks. Here's our stops. Change this and make this red. Red for stops. Okay. Control C, Control V. So now we have 3 stops hanging out up here. It's quite a big offset in relation to the size of the candles here. All right, so just to review, blue dot, 6:20 a.m. We need to wait 5 more minutes. We're on the 5-minute chart. 5 more minutes to know if we're allowed to short this window. We do have a confirmation of a blue HMA. It doesn't matter about a close above or below. All I care about in this with this strategy is it blue or is it white? It's blue. Blue dot, blue HMA, blue candle closing below the blue open price line. As soon as this candle closes, we're going to enter 3 positions. Stops, target 1, target 2. Target 1 and target 2 are awaiting. And target 1 is taken out at the same time, actually, as target 2, more or less. Not exactly the same time, of course, but on the same candle. So now we only have 1 stop left. What do we do with that other stop? That last stop, since we've hit target 1 and 2, we move that stop to break even. And we hold that. Oh, we might have been taken out of break even right there. Pretty darn close. Maybe we were. If we were, okay, we definitely were now, which is good because then we would have lost 14 ticks on that. If we didn't get taken out at break even and the price continued to move downwards, we would basically just hold that 3rd position. I call that the runner position to wherever it might have been. So that's a runner. So should have put that in there before. Target 1, target 2, and the runner. So we don't know where that's going to be at. Hopefully that makes sense to everybody. I mean, that's pretty much it. And then obviously just invert everything that I just said here for white dots. Let's see here. Just gonna. There's one more setup that I want to find, one that works so I can show everybody. The stop puncture. I'm just going to cherry pick something somewhere. Not as common. And sometimes I don't even like to use them. Yeah, like they're not working. They're not working that well. Oh, here's one. Here's one that's very obvious too. All right, this is called a stop puncture trade. White dots mean buying. But every once in a while, the banks just don't show up for the move that they're predicted to show up in, which is this up move that was predicted. That's not happening, obviously, here. So if we notice the price moving down, down, down through a white dot, and then when the price gets to and closes below, this is called the dot price line here, closes below the dot price line, then we're allowed to actually short this window. So we would do it the same exact way, just like that. And we'd have the entry. Entry, 3 stops here, target 1, target 2, and the runner would be here. And we'd manage the trade the same way, have all 3 of our stops here, 15 ticks above. Say that's 15 ticks, I don't know, 25. Okay, well, pretend that's 15 ticks. We'll move it down a little bit. I already know it's gonna work because I cherry picked this thing. Okay, and we hit target 1, so that means we can get rid of that stop, and we move the remaining 2 stops to break even, same exact. And then we don't hit target 2, so this trade would be target 1, and then we'd close both positions at the blue dot. I know this is sloppy. That's just to show you this is a stop puncture trade, and that's pretty much it. There's just those 2 trades basically. So let's see how today would have worked, and then we'll, if it doesn't work out so well, we can make, well, I don't know, I'm just gonna do one thing at a time. So the market opens here at 9:30, and there's no trade. I'm not taking, so this is the first 5-minute candle close is here. So we're not, here, let's make it so we can't see. All right, so no trade, and now we're on a selling window. So we do have a selling window. For those of you in the know, we know that this is actually a pattern 4. So, but we're not using patterns in this strategy at the moment. So all we need to do is we're going to look for this blue HMA to continue, and we need to close below the open price line. Let's see if that happens. No. Here it does. So we would enter a short here. And looks like it's a pretty much break even. So we'll have 3 9-tick losses on this one. Okay. And now we're in a buying window. We have a candle closing above, but our HMA is still blue. Still blue, still blue, still blue. Oh, so here we have a stop puncture trade short. HMA is blue. Candle is blue, closing below the stop price line or the dot price line. This is a stop puncture trade, SPT. So entry goes at the close of that candle. Drag that puppy up there like that to the wick. Where's my little stop pad thingamajig? I will bring you. Come to me. Out of the way. Let's go now. Okay. All right, so our entry is here. And we made a little bit. 49 times 3. Control C, Control V, Control C, Control V. So there's 49 times 3. All right, and now 11:55 comes along. And we have a blue HMA, a blue selling window. And now we just need a candle closing below that open price line. Nope. Ooh, I can tell this one's going to smack us. So here we have a stop, and as we can see, for those of you in the know, this is also a pattern 4. There's a new low there at a blue dot. Same as this one. Look at how well that pattern 4 works. Whoosh, bam. We can go over patterns, but that's not surprising. When the price moves down into a blue dot and puts in a brand new low, let's see how close. Oh, absolutely a brand new low. This is the nearest low that I can see. And the price moves way down. Like the selling move started early. It's already done. So because we put in a new low and move down like that into a selling dot, instead of calling this a pattern 2, a blue dot is a pattern 2, a white dot is a pattern 1. So instead of calling this blue dot a pattern 2, we invert this signal and call that a pattern 4. It's the other even number. It's the even number fraternal twin, if you will, of a blue dot. There's the male and the female, the yin and the yang. So, but we're not using patterns. We'll see how it goes without patterns. So here, where were we? Okay, so we have a stop puncture long here. Our HMA did turn white. So like this, and our stop box comes over, and we'll see if we get lucky and hit a pattern. Oh, pretty close. I would take that. It's only 5 ticks. Absolutely. I actually use that 15 tick box on my targets as well. So if I'm watching this trade, if I'm not, one of the beautiful things about Warp is you can just like leave your trade sit and go to the bathroom or whatever. But if I happen to be at the desk, if the price gets in this 15 tick zone right here, I'll close that daggone trade. I'm not going to let this thing go all the way against me. So I'm going to give this one to myself right here in the middle. And now we're going to break even on these. I have a tendency to watch my trades most of the time. And then we come back down. And for anybody who's seen the webinars, you know that these 15 tick pads are not, it's nothing new. And then we close below, this is pretty cool. We close below the open price line with a blue HMA. So now we can short this blue bar here. That's a short. Huge risk on that thing, plus the 15 tick. I guess it's not. Well, let's see. 174. Yeah, I mean, that happens. You'll have that on the 5 minute. You will have that. So our entry is here. And then we get out with 87 ticks times 3 positions. Okay, and now we're at 1240. We're on a white dot. Did not close below the dot price line. HMA is blue, so we can't long, we can't short. Nothing to do. Oh, so here, I really don't like, you see how we have, we do have the white HMA, and we've closed above, but that's a doji. I want a white bar. There it is. Oh man, that's not giving us much risk room. Not much to work with there. I'd have to switch to a lower time frame to see if that hit our targets before it stopped out. So I'm just going to call that a stop out because I'm way too lazy to be switching time frames. Okay, and then 205 comes along and we need to close below. There it is. I'm moving too fast for anybody. Tough luck. Target 1. Target 2, no stop to break even. I'm not going to switch to a lower time frame because I'm just not going to do it. We could have gotten stopped at break even there. I doubt it though. And hot damn, a runner that actually made it happen. So we're in here and we let that runner run all the way to there. We have a white dot and we need a white HMA to go along. That never happens. Oh, here we go. We have a puncture trade. Short. Target 1, target 2. and taking out a break even. Bam. Oh, it's a good thing too. TachEon. All right, blue dot, no blue HMA, nothing to do there. We're done for the day. So there's that day. Let's see what that adds up to. No FOMC or anything today. Fairly normal day in the NASDAQ, I would say. So there's all your winners. I mean, that's as straightforward as you can get, I feel like, with the strategy. Doesn't get much better than that as far as easy to understand, right? Let's do the math here. Trading NASDAQ. Let's put the winners in first. 49 plus 49 plus 49 plus 58, 87, 87, 87, 71. Minus 37, 37, minus 1, minus 961 times 5. Oh, just 4,800 bucks. No worries. 4,800 bucks profit minus commissions, of course. So, I mean, we could call that, I mean, even take out 800 bucks for slippage, and maybe this one didn't get break even. So, I mean, you're looking at like, even take off 1,000. I don't care. Take off 1,000 of that. You're still looking at 3,800 bucks. That'll pay for your software right there in one day. Let's go see how the other day worked that we had forecast for. Now, don't forget, anybody who does not have the software, these times were available in the emails and on the website. So there's no way for me to be faking these times. There's the same exact times. So let's go look at one more day here. Start over. I'll do every trade here. Get out of here. I don't want to see you with little arrows. All right. And the day starts here at 9:30. And yeah, it could be argued that you might take this long here. 9:30. This closes below. This closes above. Yeah, you might take that long. If you're trading from the open, you might do that. And then you get a loss here. Start the day. Yay. Okay, the 950 is selling. Short. Stop out. Oh, plus the 15 ticks. Don't forget that. 15. Let's make our box here again. That hurts. That hurts a lot. Okay, let's see if we can get something that doesn't hurt. Oh, look, and it comes right back. Wow, what a surprise. Okay, there's a short. Target 1. And we're back to chilling now. Okay, now we have a short. Oh, you stinking son of a. Is that within the 15 ticks? Probably not. Oh, disgusting. Disgusting. Pretty close to a pattern 4 right here, by the way. And this is a pattern 5. Just saying. Oh, look, another stop out. I'm just making my system look so great. Be lucky to survive with our pants on. Oops, this day. Okay, and then we're allowed to go long here because we closed above. But you know, you'll have that. Oh, you piece of trash, garbage. So -3, -3. Oh, and another short here because we closed below again. Oh, and if we did take that, that's another loss. And no trade there. I don't always allow 2 trades per window like that either. That one, another loss. Something like that. Another loss. This is what yesterday felt like to me as well. And that's really close to it. Well, it depends on how you want to define a pattern 5. But we'll go through this, and then I'll show you folks another way to do this. Gee, what a piece of shit. It's the first time I've ever cursed on a webinar. Beep, don't listen, kids. Oh, and we're done. Totally horrific. Was this the FOMC? Oh, this was that son of... It was. So an FOMC's, right? Wasn't it an FOMC? Oh, no, it wasn't. Yesterday? Wednesday? It was FOMC in the morning. When there's FOMCs in the morning, you have to be careful because these signals can invert. Michael talks about it all the time. I mean, we could just look at, I don't even want to do the math. Oops. That probably, yeah, that like destroys all of our profits for the next day. But this is like, you know, if you have a hard rule system, like this is, you'll have that. So we'll start with the winners first, I guess. 1, 2, 5 plus 1, 4, 7 plus 1, 2 plus 79. Dude, that's like as bad as I've ever seen. It actually makes me feel better about how my trading day went with another system that I use. Holy criminy. Wow, yeah, I've never seen it that bad. Never have I ever seen that. That's max drawdown. That's max drawdown. Cool. Well, now we've seen it. And now I'm going to show you. Let's see if this technique that I taught last week will save our ass on this or not. Because it might not. Let's find out. So we're going to add a second data series. They're going to be seconds, and they're going to be 150 seconds, half of 2.5 minutes. Okay. And now we're going to take the 5-minute candles and we're going to make them a little bit chilled out. We're going to make them black and gray. Actually, we're going to make them transparent and gray. Let's see what that looks like. Now we're going to switch to 150 second. Actually needs to be on panel 1. Okay. Let's clear all drawing tools. So minus 10,000, minus 4,000, that's minus 6,000 for Yeah, so like about minus 5,000 or 6,000 for the 2 days. Let's see how much better or worse this other system does. Drawing tools. Actually, you know what? Before I do that, we'll just duplicate this. I'll save it over here so we can look at it. Now we're going to remove all drawing tools. Okay. So now we have the 150-second candles overlaid on top of the 5-minute candles. Why not just use a 1 minute? Because reasons. Then we're going to come in, we're going to add the opening range indicator. It's available free on the NinjaTrader ecosystem. Opening range indicator, you can search for it, you can find it. I know you can do it. I'm not going to send it. I'm sick of sending stuff that you can just go find yourselves. Open range indicator, NinjaTrader ecosystem, install. So we're going to do 1, 1, 1. You know what? You guys need to see it, so I'm going to do 2. This is going to give us the range, the high, the mid, and the low from 9:30 a.m. to 9:45, and apply. So we're not trading the first 15 minutes, okay? So there's the range of movement from the open to 9:45, first 15 minutes. That's the whole range right there. And now I'm going to take this Fibonacci tool that I made. You can also make this yourself. You just, I know you can do it. Load. Where is it? Right here. And all it is a bunch of different price levels, all 100. It's all broken up by 50% positive and 50% negative. And then you can color it or not, apply. Okay. Take this, throw it at the bottom, move this to the top. So that purple area, that's the opening range. Now we have a standard deviation of 91 ticks. So, is anybody lost yet? There's our opening range. We split the opening range, excuse me, we split the opening range into 4 equal horizontal price sections. 1, 2, 3, 4. This is the middle. And I call this a standard deviation. From here to here. From here to here. One standard deviation on this day is 91 ticks. So we know that we can set our risk model however we want. Maybe we only want to risk $500 per trade. So you trade a maximum of 1 NASDAQ E-mini future contract per trade entry. 91 ticks times $5 a tick equals $455. Okay. Now we can attempt. Let's try the same system, but we're going to use opening range theory instead. Okay. So blue dot, blue open price line. We still need to close below it, and we're going to be entering on the 150 seconds. So it's going to give us more chances to enter. And I'll show you if we can get a daggone entry in this window. Nope. Oh, here's one. So now we've closed below the open price line. Oh, you stinker. I almost forgot. I'm going to switch the HMA to the 150 data series. I'm going to get rid of that one, and I'm going to come in here. I'm going to grab color MAs from Back to the Future. It's free of charge. Email Rachel or Dave. They can get you the file. See, I'm outsourcing. Outsource. And then we're going to change the input to the 150 second. So it's very reactive, reacting to the 2.5 minute chart, the 150 second chart. See that? Oh, it's so much better. Okay, so here's our entry candle. We got a blue dot, blue HMA here, and we close below. So now what? What do we do with these standard deviation lines? Well, we want to pull back to the line above, not this line, not that line, this line. Our candle closes here, so we put a limit order right here, and hopefully the price pulls back, and then our target is going to be here, our stop is going to be one line back. Just going to change this to red. And I have no idea if this is going to work or not. Okay, we do get filled and target. It's already starting out on a better foot. 91 ticks, one winner. Okay. Now we have a white dot. We need a white HMA. There it is. Now we need a pullback to here and a target here. Okay, got it. And we could go down to a smaller time frame and see that we might have been filled and target taken out all at the same time here, but maybe not. So we could call this one a loss or a win. I mean, we could go down to a smaller time frame and figure it out, but we'll call it a loss. So here to here. There's also another technique that sometimes I think is better, where you have, and I haven't showed this one yet on the webinar, but I'm going to show it right now. So you actually have your entry here. Two stops. Target 1. Target 2. So your target 1 is 50%, and your target 2 is 100%. So target 1 would be here, target 2 would be here. Your entry is here on this pullback right there. As soon as you hit target 1, move stops to break even. Entry, target 1, stop to break even, and then you come down and you hit your target 2. So on this trade, what's that noise? Alarms. Wow, that was annoying. Okay. So we come back and we hit the entry, and then we come up and we hit where target 1 would be, right here, 50%. But we can call that one a loss. Okay, and now we have a blue dot. And we need to close below the open price line. Oh no, I didn't realize I need to make these thicker. Bear with me for a second. These dot price lines, I need to make thicker. I missed it over there too. Or timestamp, dot price line. Make that a 4. That'll do it. Okay, so we actually had a puncture down here. See that? So that means we take a pullback right to the line, right quick lack, and then we do a target here. So bam, bam, and 11:55, nothing, nothing. And then do we close above there? No, not quite. Here we do. So now we need a pullback and a target. See if that happens. Pulls back and target. Target's here. It's okay to offset everything by 15 ticks as well. And tell you what, just get 3 winners and close your damn computer. 3 winners is all. And if I can get 3 winners, then I just get me out of the damn chair as quickly as possible. So we have our 3 winners now. Winner. Oh no, we don't. We need one more winner. Sometimes I think 2 winners is better. So 1 winner, 1 loser, 1 winner. So we have 2 winners. These 2 cancel each other out. We have 2 winners. Okay, let's see if we can get a third. Looking for that HMA to flip. Oh, here it is. HMA flips here. So it's actually on this, the close of this candle. So we need to pull back here, target here. Pulls back. Let's see if we get a target. Come on, come on. That's right. Oh, oh, oh. There's our 3 winners. Get the hell out of the chair, go home. Get out of the office, go. Just run. Run away from the computer. You've gotten 3 winners. What else can you possibly ask for, Jake? I really do. I have this theory that, like, if I get 2 and definitely 3 winners with this method, that all I'm doing for the rest of the day is gritting my teeth and hoping that I don't give all my money back. I mean, because that's $1,500, and you can be really a lot more consistent this way than that other method. Way more consistent. I highly recommend that. And if I could get everybody on the webinar doing this kind of trading warp like this and get the feedback from everybody, like, that would be sick. I can tell you that I've gotten a lot of positive feedback so far. I've had private mentoring sessions with a bunch of people now with this method, using this and another software from Back to the Future as well, using this opening range method. So 455 times 3, and everybody's given me positive feedback so far. $1,365, and man, your commission's only 5, 10, 15, 20, $25. So I'm calling that done. Let's go look at the other day. I feel like cursing a lot today for some reason. Oh wait, what was this? Oh, this was already the day that was the winner. Oh, okay. Well, let's go. Let's go back and look at Mr. SHIT show of a day here and see how it works. Wait, is that right? 140. Oh yeah, it is. Okay, so this is the day that kicked our butts before, right? This is the day. All right, so here's our first 15 minutes. Open to 45. We're not allowed to trade there because we're trying to figure out what our standard deviation is. So there's our low. Oh, I thought I made some. Gosh, Christ. And we're gonna pull that purple to the top. Ugh, ugh. See how accurate we got that little stinking thing. There we go. And we'll pull it down a little right there. Ugh. And lock. And proceed. Here we go. 950. Selling window. Blue HMA closed below. We need to pull back to the line right above. Oh, what's our standard deviation? So before we even start trading, right here, literally right here at 947, I'll go back and I'll go, oh, okay, well, what's our standard deviation? 70. Oh, 70 ticks. Okay. Well, I can definitely use NASDAQ contracts. So 70 times $5 a tick is $350 a risk per trade. So let's just use one NASDAQ contract. We could possibly use 2. You can also you could also use micros if you wanted to get up to that 500 or so risk or on profit target. But we'll just do 350. So we can just stick with 168. And I should mention, I didn't mention before, there is that 15 tick pad as well on either side of the stand. Just give me a pad on both end for the stop. Okay, so get out of here, crosshair. I don't like that thing most of the time. song, this alarm. Hold on a second. Welcome to annoyance. I have no idea why that would even be going off. Chart trader. Stem. Account's not connected. Oh my God. Oh, hold on, everybody. This alarm will seriously last like 4 minutes if I don't figure out. Somehow I got disconnected. Oh, there it goes. Oh, geez, I'm crap. That was a catastrophe. Okay, well, that gave everybody a little bit of time to consider what I was just laying out there. Yes, I do, Len. Yes, I do. Okay. Let's go back to what we were doing. Oh, it's the guy with the blower. February 7th. Go to 8 p.m. MNQ. I don't know why it just switched to the MNQ. Maybe it was before and I didn't realize, but whatever. Okay, where were we? So rudely interrupted. 68, bam, bam, okay. And 1050. No close up. Oh, now we have close below the dot price line. So we're looking for a real quick pullback to this line and for a target down here. Does that pull back? Is there a wick there? Can't tell. I wish that there was a way to not. Yeah, it looks like that does pull back. It's pretty close. See it within 5 ticks. Yeah, may or may not have gotten that entry. Looks like we did. I'm calling it a second win. That's what I was talking about, that pad. Like if we get front run your daggone target, your entry by 5 up to 10 ticks, front run it, because these little wicks like this will happen. You might even want to use like a market if touched or like a target chase or something in your ATM strategy. Okay, and then 1150 selling window. Oh, here we go. Close above. So that's pull back to here, looking for a target above. And oh, stopped out. Right, 15 ticks, 19. Yep, stopped out. Bam, bam. Okay, and now we have another long opportunity on this pattern 5. So we're looking for a pullback all the way to there and then to here for a target and stopped out. Not surprised. And now we're closed below the dot price line. So we're looking for a target up to entry here, target here, unless this one, next one closes below, there it is, and stopped out. This is why I say 2, even just 2. Oops, what am I doing? Even just 2 winners. And now we're long again here. So we'd be looking for this pullback here, target here. There's a winner. No more opportunities really allowed here. I mean, that's already probably too many in that window. 220. I mean, I don't know. I mean, you could because we closed below again there, right? So you could do a pullback here and you would get another target there. Just depends on how many times you want to let yourself do these in there. And then this one that closes above, but it's too late. And this would be a pullback here. Doesn't happen. Okay. No. Okay, looking for a pullback there. There it is. Stopped out. I don't know. Anywhere in there, did we get our 3 winners? I think we got 2. We got 2 right up. Oh no, we did. We already had our 3 winners. Right? Oh, well, what the hell am I even going to keep? I don't even want to keep back testing. I'm over it. If I get 3 winners in my back testing, then I don't even want to bother with the rest of the day. 1, 2, 3. So was that 350 times 3? $1,000. There you go. Let's look at another day just for fun. It's not really part of the, what would that be, the 8th? Just to see if we can get our 3 winners. Oh no, the 7th. Ooh, FOMC. And we can see how small the standard deviation is on this day comparatively to start out. Load. Just gonna slap that at the bottom. Top. Tiny little STs today. No, that's not right. Oh, I didn't go all the way to the top. There we go. 53. F7 here. So we are in a long window. 9:45. This candle closes here, so we're looking for that pullback and a target there, and that one gets stopped out right off the bat. Geez, look at this. Nasty. These days, when the FOMC news releases in the afternoon, best watch yourself. Pullback, target. That's a winner. So now we're break even. Pullback, target, maybe. Stop out. So now we're down 1. Nothing. Oh. Puncture. Pullback. Target. Come on. Now we're break even again. Pullback. Target. Does not pull back. Pulls back here, so this is like a half. Hole. What I actually did trade this, and what I did was I'm going to lose it. I'm going to completely lose it. Oh, it's because it keeps disconnecting on me. Oh, maybe it's a disconnect alarm that I just didn't realize I had set up. Can you guys still hear me?